Did you find it?
Hello, this is Dave, and welcome to Equity Story. This is just general share advice and not personal advice. And I do believe we've got a very happy Wolf at the moment. He's managed to. His mum was with him, and he's managed to send her off to Poland to fight the war. So that's what you do, isn't it, Wolf? When you've got a really sort of your mother in the house to drive you mad. Send her off to the war zone. What a good idea.
Sort it out. Yeah, exactly. No, look, she needed to go there, after the tragedy that she had with her husband. So, yeah, it's just one of those things. But I needed to get away anyway from just the hustle and bustle for the weekend. So apologies for not being there on Monday. But you did a great job, Dave. Well done.
Yeah, she'll give Putin a bit of. I think she's better off fighting than you anyway. I reckon your mum would. Your mum would maybe get more Russians than you would, I think.
I would be bloody corner sucking my thumb somewhere.
What like you did when the share market goes down?
Pretty much.
Oh, all right. So Happy Wolf just sent his mum off to war, as every good son does. And let's have a look at the market, Wolfie. Wolfie, before we start, yesterday, God, where are you when you need you, right? Because there was two stories that came out.
Yep.
BTC had a nice little move up 20-30%. Yeah. And Whisper, I'll get the Whisper chart up. Struggled a little bit yesterday. And I think if you look on the daily, we decided yesterday it was already down really when we did the talk, but we're just going to play it by the daily chart. Now, you look at both stories, and both stories seem to be on the mend, right? They seem to be sort of going towards cash flow positivity. The results are good. My question for you, and obviously I already know the answer, but I just like you to look intelligent. So what when you've got two very similar stories and two really good stories on a recovery, why didn't the Whisper one go on with it?
Because this is why I've divided the story that we looked at into tiers: tier 1, tier 2, tier 3. So DTC, while it had baggage, it actually is cash flow positive, right? EBITDA positive. So that's a very different kettle of fish to someone being still cash flow negative and pumping, still losing a lot of cash, where they maybe have to go back to the market, right? This is the dividing, unfortunately, the dividing between the stocks, where the investors look at it and go, well, DTC, even though it's been smashed before and so on, they are on the improve, but they are cash flow positive. They probably don't need to go to the market and raise cash anymore. Great, let's put them up. You look at Whisper, there's probably a couple of things there. It is still, while they said that probably all the right things, they had a pretty reasonable result. And they've actually said, look, we're accelerating. We want to actually get to cash flow positivity in the next 12 months. It just wasn't enough for the market. That's why you see the MP1 chart go bang when they said we are cash flow positive now, versus Whisper, we're going to be cash flow positive in 12 months time. Investors just 12 months time. They want to see what happens today.
And the more you look at the character of the market and the way the market's moving, for me, no more tier 2. Only should be tier 1 if you're going to play in there.
Okay, I think now that's exactly what it suggests, right? Is tier 3, unless you become cash flow positive now, forget it. You're going to struggle unless you come up with miracle numbers somewhere along the line. And I think it's pretty much the market's telling us that, isn't it?
So let's look at NTO, which was a tier 2, and looks like it's still going to be a tier 2 for a while. And bang, down 23% today. Very poor price action, but
actually tier 3, Dave. Tier 3 where they lose money, right? The tier 2s are the ones that are cash flow positive. The tier 1s are the top tech stocks where they're actually profitable.
But you know what, Wolf? You read through the report, you feel sorry for them. They've done everything the market's asked them to do. Like, guys, just slow down your top line spending,
yes,
calm it down. Let's get, and they've done all that like good little boys.
Yeah.
They've done it all, and they said, yes, we're going to get to cash flow positivity. Well, we're going to be a tier 2, and what happens? The market says, well, that wasn't good enough, was it? Because we want top line growth as well.
Yeah, exactly. This is why the market is pretty harsh. There was another couple of things in there where the market probably going, well, guys, you could do better. I mean, because they had actually, well, yeah, they're obviously addressing the bottom line, like, you know, we want them to, and the market wants them to, but that comes at a cost. So, you know, the top line, of course, was affected, like you said, but there was another couple of things in there. One was they're still talking about macroeconomic problems, right? And the synergies. They actually took over a big company not that long ago. I don't think that's going that well, Dave. That's the other possible problem, because they said their synergies were going to be like almost 3 million, and they said, unfortunately, guys, the synergies are not going to be 3 million; they're going to be 1 million only, which is a negative. You know, you're expecting
that company is an American company.
No, I think he come out of Europe, came out of like something like Denmark, I think.
Right. Well, yeah, they're another basket case, aren't they?
Exactly.
Okay, so Wolf, let's talk about this, because it does lead us on something like NTO to the world markets at the moment. And Walmart came out last night, and forgive me, I'm just going to go back onto a weekly for them. So Walmart came out. Now, extremely disappointing. And explain it. Your general feeling is hello, a sign that maybe America is going into recession.
Yeah, you know, I think it's written in the Walmart numbers, really, when you see their second profit downgrade in 10 weeks, talking about inflation, talking about shrinking margins. That's the retail, the discretionary retail. So, you know, so the furniture, the clothing, all this, because, you know, Walmart's got everything. It's not just food, it's got everything. That's not going great guns. And you can see the purse strings being tightened in America. You know, the only thing that was going okay for them was the food, even though there's still inflationary pressures in that thing, and the margins are pretty tight. That's really the only place you could probably go, or it's still going okay, because people still have to eat food, right? But this is a strong shot across the bow, saying that America's definitely slowing down, growth is slowing down, and possible recession is, if it's not upon us, it's probably already in there. And you can see, not just with that, right, Dave, it actually reverberates now across other sectors like tech stocks. We had a look at Snap, right? We talked about Snap. You can see what happened. The media stocks, the darlings, got absolutely hammered. It's the advertising slowdown. That's all part of the recessionary type, you know, things that happen when you've got even companies tightening the purse strings, which means less advertising. It's just a natural progression of what actually happens when you go into a economic slowdown. So you can see the numbers.
We spoke about it earlier, and we're talking about Snap. Really, why would Snap be? You know, the whole market was watching Snap. The Dow sold off 1 or 2% on Snap, and I'm saying to you, Snap, I never even look at it whatsoever. It's just a great benchmark for the advertising.
Absolutely, because that's the only way they can make money. There's nothing else to it, right? So that's why the Googles of the world went down with them. Well, not as much, but went down with them. That's why Facebook, again, I mean, that's the only way they make money is advertising. I mean, to me, the worst possible model you can ever think of, advertising, right? Where you are just at the mercy of the global economies. You've actually got no product to sell. You're just getting advertising money through it.
All right, Wolf, we're taking this as a story a little bit today, right? So you've seen the issue with NTO, and it's obviously some of the businesses and the models around the world are just stuttering a little bit, right? You've seen the issue with Walmart. It's such a benchmark as Snap of what's going on in America.
Yep.
Again, this really plays through to our thesis, right? That the market has still got a long way to go. And although we're seeing this little bounce, and sort of a bounce predicted, it might bounce up a little bit more. The general feeling is that we're going to go a lot lower come maybe later on next month, possibly September, around that time. You can see this market going a lot lower, especially going into recession. Now, surely also what you know, and this is my issue with it. There's so many issues out there. Generally speaking, Wolf, an average pullback on markets on a bear market is 35%. So you would argue that, okay, we're down 50%, there's still another 20 to go. Yeah. Now, but what we've got here is a world economy and a lot of problems with inflation going up. Surely we've got deflation here.
Look, it's an interesting question. I'm not sure whether I can answer it at the moment. It is difficult. We know we've got inflation at the moment, right? So I'm not sure about deflation. That maybe will come, right?
Right, because what I would say is that historically, and this is all I can do is look at charts, right? Historically, when we had in the 70s, we had deflation, the markets went down about 50%. And this goes to the theory that this market could sell off a lot more than what we're thinking, even 20, right? This is, it's a very, I just want to explain, this is a very, very, very dangerous market right now.
Yeah, look, you have to put out a base case scenario, right? And that's understandable. We got to talk about these scenarios because if they might happen. I mean, that's why we talk about them. Otherwise, we wouldn't if we didn't think it's a possibility. But there is a possibility of that. And like I said, I think the next 3 to 4 weeks, we'll know exactly the picture of what's happening, right? We've got already Walmart that's just come through with a warning. Amazon's going to probably follow suit, I'd say, right? That's why Amazon has been an absolute desperation buying stuff outside of the core market, buying healthcare. They know that they need to diversify themselves. Otherwise, they're going to be open to pretty much similar forces to what Walmart's facing. So yeah, look, I'd say if the number of companies come up with pretty poor results and downgrades, we might see that another 15%, like you said, down to 30% down for a bear market.
So big warning out there. Everyone trade carefully. Wolfie, let's try and talk about a bit of positivity. Stuff. We are getting some moves. So, good to see MAD going through the buy signal, possibly a good sign,
Yes, I hope so.
Again, if someone bought that buy signal, I've got no problem with you taking a profit in this market.
Yes.
A few buy signal, BBT's up, Cobb not looking too bad as well, starting to go through that buy signal. Again, this market, very dangerous. Just don't be greedy if you make a little bit of money. Now, one story that you want to talk about, we should get on the radar is Somnomed.
Yes.
The chart's not there yet, Wolf, definitely, and I can't even give it any sort of excitement on the daily. It just needs to do a lot more. And again, the problem is it is looking like it's going to recover, but if we start getting to recession, this could turn south again pretty quickly. These sales numbers, so that's the issue. Any stock that maybe looks like it's recovering just might not because of the world economy. But go on, Wolf, fire away and tell us what you're liking about this one at the moment.
Well, when you look at it, right, it's been sold off. So this is a candidate for that contrarian play, because if you look at the numbers, you've got record quarterly fourth quarter and FY22 revenue guidance of significant up from the previous one. So full year unaudited revenues of 72.6 million, right, which is up 16 versus PCP and above guidance of 15% growth for FY22, right? So it's ticking a lot of positive boxes here for me. You've got an FY guidance of break-even EBITDA also remains. So that's also a good thing for the market. The market's always looking right now of you've got to be cash flow positive, otherwise we just don't want to know about you, right? We've seen it with tech stocks. So that's a positive. You've also got a company that's 100 million market cap and coming up with 72.6 million in revenue. So it seems reasonably cheap on that basis. We've got 15.6 million in cash. Patients growing. The best thing about it for me was the actual growth, and it was all regions, Dave. It wasn't just the one that was holding up the bargain. Europe was up 37%, North America was up 42%, and APAC was up 8%, which are total group revenues of 32% equated to that quarterly. So all up, I think this is one of the sleepers on ASX right now. And I think, like I said, if I'm looking for a contrarian, I'll be putting this in my watch. It's maybe a little bit too early, but have it on the top of your list.
And maybe more interesting, obviously, if we do get that bigger pullback in the markets.
Yeah, possibly. Absolutely.
Excellent, Wolfie. MLD takeover offer. So someone asked you the other day if you like this, and I think
and I said, yeah, well, no, there's better things out there. There was and there is. However, I had no idea there was a takeover offer coming. So apologies. But But obviously the insiders, Dave, with that green little candle a week previously, they knew something.
The charts don't lie, like we said. Now, Wolfie, if you are in this, because I think there was one of a few clients were in this.
Yep.
Are you selling now? It might not happen, right? So
I think it will happen, and I'll tell you why. First
Yeah.
of all, it's a big company, TS, right? Multinational, right? It's not as if it's like some Chinese, that we don't know but never heard about that are coming in. Sorry, I should not be picking on the Chinese, but sometimes they come in and we've got no idea who are these guys. This is a very well-known brand. I think there should be no problems with FIRB at zero whatsoever. There's so many of similar companies out there. And the only other thing is will MLD recommend it? And I don't think there's a problem with that either. Let me just double check that. So I think all in all, I think the market's saying it's probably going to go through. It's at 102, so just slightly below at 98. The question is there someone else going to come in and take, make a play for MLD? So it's always a possibility, but it's probably a very, very low possibility here. So for me, look, you can technically you can probably take your money and move on. You're going to only miss out on 4 cents, right? But if you're patient, hold on in there. You've got nothing better to do with the cash, and maybe you hold on and see. So let me just have a look what MLD says. Hang on, to see what they say. Announces that it's entered a bid implementation under the thesis. Says 102.5. Says just okay. Okay, so this is the only worry from the MACA board has not yet determined whether or when such dividend will be declared. So they don't know whether there's going to be a dividend, which means they don't know if it's going to be 102.5 or slightly a little bit below, where they're going to give a dividend back. Cash offer, okay. The directors of MACA recommended MACA shareholders accept the offer, so they're happy with that. So I think it's, when you say normally a done deal, this is probably much a done deal, but not being 100% confident, because you just never know there might be some technical reasons where they're much going to go through. But I think they're even saying that all the directors are intended to accept the offer.
Brilliant. All right, Wolfie. On that note, we've got live tonight at just remind we've got live tonight at 7 o'clock.
Yeah.
If you've got any questions, please ask us live. It's one of the best services in the industry, what we do here at Equity Story. And just come on tonight, 7 o'clock, and we can answer. And Wolf's going to say, go on.
One more thing. Can we just quickly talk about Freedom Foods? Because I wanted to just quickly mention about how difficult it is sometimes being a small little fish like us, right? Or even, if you're just a single investor, good luck to you sometimes. So you've got a Freedom Foods, which you used to follow, we thought it was a good little company growing and so on. So unfortunately, it wasn't what they purported themselves to be. They actually fell apart after many downgrades. They actually almost went bust. So they are being sued, going to courts. It's one of these orders that Deloitte's coming in and saying, guys, I think we've been dudded, right? So can you imagine if someone like Deloitte gets, pretty much misled by a company? We've got no hope. We've got absolutely no hope. If the numbers are fudged or, creatively played around with, we've got no hope whatsoever. So unfortunately, this is the market for you, right? Sometimes doesn't matter how great unless you might be, doesn't matter, what.
But questions have got to be asked. Who was the auditor for them, Wolf?
Yeah, well.
You've bloody hell. You'd like to think the auditors.
Dave, if someone lies, right? I'm not saying this is going. I'm just saying if someone lies and fudges the numbers, you can still trick auditors, right? I think it can be done, and we've seen it with Enron. We've seen it with a lot of things, right? So it can be done if you wanted to. So that don't, you just got to be clever about it. But it just shows that it doesn't matter if you talk to I remember they were talking about good stuff all the time. Oh, everything's going well. Don't listen to any CEOs.
So yeah, I mean they're obviously absolutely furious with Freedom Foods, believing they've been really dumped by them, right?
Yeah, dudded completely. Yeah, absolutely. So that's why they're basically saying we're not liable. As auditors, we're not liable because we've been duped ourselves.
Well, but Wolf, you're seeing issues like this all the time on the market, right?
That's right.
why are these directors not being held responsible? You're not seeing.
Well, they are. Well, they're obviously going to court, right? So they're
Yeah,
trying to.
but you don't see,
right?
you don't often see many put in prison for this sort of stuff, do you?
No, but they, maybe they get a ban or something like that. So it just depends what sort of case it is, how bad it is, and so on. So, yeah, but I think as an investor to protect us, make this market a much enjoyable experience, there should be tougher penalties for sure. I agree with you.
It just makes it as hard enough as it is, isn't it? Right?
Yeah, exactly. And then we can do as much as we can, look at the numbers, and you're trying to believe what they show you. I mean, God say, I mean, we're not auditors, we're not sleuths out there that we're going to track every single number where it's coming from. We got to believe what they come up with, otherwise what's the point, right? That's the whole idea. It gets audited, so when we get the numbers, they have to be believed, but apparently not.
All right, Wolf, listen, just also to end, we were going to talk about the gold shares. Red announced was very, very expensive.
Yep.
PRU, none of these golds, it's holding up a little bit better.
The best was PRU with AISC, and the all-in sustaining cash cost. God, I've got English problems this morning.
Wolf, tell me, what is the story with gold in is it Uganda, where they believe they found $13 billion worth of gold?
Is that?
Yeah, it was in the news. It's like the biggest gold find ever, which was 2 weeks ago. That's why the gold price got sold off.
All right, I need to have a look. I need to have a read. I had no idea, Dave. I missed that one. That must be obviously for those goldies out there.
Yeah, I mean,
Uganda, you're saying Uganda.
So you don't get it's. They reckon they found $12.8 trillion worth of gold deposits have been discovered in Uganda, and that's a little bit why the look. No wonder they're happy. Look, maybe her house is sitting on it, right?
Maybe.
But this is huge.
Okay. Yeah. Well, it is huge. Absolutely. So I mean, maybe that's the reason why there is a little bit of weakness in the gold price. But how real this is, how much of it is true, God knows. And what do you believe in anything comes out of Africa? And unfortunately, again, I have to be the bad guy and sound like, why do I keep picking on Africans and Chinese and everything else? Because it's just lack of transparency. That's the problem.
And bombs, you pick on bombs too.
Yeah, I do. But that's another problem.
When you joined Equities Store, you're a nice young guy, and now you're man. I'm
just skeptical by nature, Dave. That's the problem I've got. If I don't see the facts and figures, and if they don't show me where those facts and figures come from, I'm just not interested, because just a lack of belief. And the thing is, history is my best friend, right?
Yeah, so I could see you in the Ku Klux Klan. You've got that look. You've got that look about you. But yeah, if I hear up in Queensland,
I need to put like a white sheet on.
Yeah, if I see a bit of that going in Redcliffe in Queensland, I know who's leading it.
Oh, thanks.
Watch out, the wolf.
Oh no, I'm definitely not that way. I'm actually opposite of that. Is that an opposite to Ku Klux Klan? The communist clan?
I don't know, something. All right, go on. Sorry, no trades today, guys. It's just like, I think we just got to be a little bit careful. But generally speaking, what's important is it's playing out exactly the story we believe is going to play out.
I think the only thing, Dave, to say is that, like, I think right at the start you said the right thing. If we're going to play now, we've seen enough of evidence on the tech stories. If you're going to be playing the recoveries, the safest bet for sure now is the tier ones or the tier twos, right? The ones that are cash flow positive. Tier threes, do not touch. I think they're just too risky.
Yeah, even when you get a double on Z1P, it's just
exactly.
All right. On that note, thank you very much. Thanks, Wolfie.
All right.
See you, mate. Take care. Bye-bye.